I always look forward to this on the Sundays. Let's see. All right. Well, welcome everyone to Bullshit and Bourbon for our regular Sunday episode. We got. Let me take mute on this. We got Taylor. We got myself, Mike, and we got Hobus here, and we got Jeff. But Hobus and Jeff are just on voice because Jeff is a busy person and Hobus is mysterious. So
Hobus is faceless.
yes, faceless but not voiceless. So I want to give a quick background. Everyone knows Jeff. He's a hedge fund manager and helps people with investing and that sort of thing. Taylor, being a lawyer, has title companies and a law firm. Also, is huge into investing. And Hobus is actually a hedge fund manager, a younger guy. I'm guessing much better looking than Jeff. And
I would agree, probably just by default.
And but Hobus is also a hedge fund manager, but has his finger in crypto as well, and on the younger side. So I'm really glad that both of you were able to make it because I'm really excited to hear kind of your different viewpoints. Jeff not knowing a whole lot about crypto and being a traditional finance guy, and Hobus being a traditional finance guy and younger, and having that knowledge base about crypto. But before we get into that, I wanted to just kind of start off with something a little bit on the lighter side. And I got a couple of laws, and maybe Taylor can help with this as well. But we have some kind of funny and crazy laws that are actually on the books in some states. The first one is out of Arizona, where it's illegal for a donkey to sleep in a bathtub. I guess in the 1920s, a donkey was swept away in a bathtub during a flood. So it is now illegal for a donkey to sleep in a bathtub in Arizona.
Well, that
Seems
makes
very
sense.
odd how that got passed.
Who voted on that?
Yeah.
It goes to show you there is way too many laws on the books. If there's a law about a donkey sleeping in a bathtub from the 1920s that hasn't been wiped out, we need to do some house cleaning before we make new laws. So how does that work, Taylor? As far as getting rid of old laws.
Well, I mean, that's the hard part. There's no mechanism really in any. Actually, I have a client that's what he talked about. What he did is he helped European nations and European cities deal with all the regulation because he goes, they have laws that are 1,000 years old. And so when you have that problem, what do you do when, back 1,000 years ago, they said, you can't build anything on this piece of property because it's, some sacred ground to some god. So he goes, there's not very good mechanisms. And the problem is every nation has that problem. The longer it exists, the more laws come about. But a lot of these laws could also just be local city ordinances that are created.
Yeah.
So, yeah.
Like one that you can beat your wife on the courthouse steps as long as the stick is no wider than your thumb and it's on Sunday or something like that.
Yeah.
That's where the rule of thumb came from, right?
What's that?
You know that? That's where the phrase "rule of thumb" came from.
Yeah.
Was the measuring stick? Yeah.
No, I actually heard that on Boondock Saints. That movie, fucking awesome movie.
It is an awesome movie.
Yeah, but we talked like today. The problem is the way that technology is moving and how fast it moves. That lawmakers can't keep up with it because it takes so long to make a law. By the time they make a law, it's becoming obsolete because they've already invented something else that's better than the thing that was before.
Well, a lot of those laws too, like especially the city ones. Like I unfortunately didn't have the time to do what you did, Michael. But a lot of the laws are like I saw one when I was watching. I saw one of these lists, several years ago. It was some city in California with some ordinance where it was like it's illegal to catch a butterfly, but only on Sundays. Again, like whatever. Like it's like a $500 fine. But what cracks me up on a slightly more awkward awkward thing is the ones when they pass the laws that are impossible to enforce. So it's all just for political show. So, for example, in
Oh,
Texas, until like 2000 or 2002, sodomy was illegal. Okay. First of all, I don't think
Well,
that's really anybody's business. But here's what's interesting: how the hell are you going to enforce that law? Like-
Jeff's like, my body, my choice.
Yeah.
Well, and just for the record, sodomy was defined as anything, man or woman, man, what, anything that's not vaginal sex. So it's a pretty broad
that's-
definition. Yeah. So oral sex was illegal in Texas till like 2002, technically.
So there's a lot of guys sodomizing their hand.
Exactly. Well, or their hands sodomizing them. Either way, I don't know which way. Depends if the hands mean or not. Yeah.
Who
Yeah,
goes
Lauren,
to jail in that
Well,
situation?
What's that?
I said, who goes to jail in that situation?
Right?
the-
Like,
The
Just
case that
put your hands
overturned
in the
it's
bar.
called Lawrence v. Taylor.
You go. You get put in the jail cell, and you're like, "What are you in for?" I'm a sodomite. Hey, me too. Ah, shit.
Speaking of Texas, a crazy law in Texas is it's illegal to milk someone else's cow.
I don't doubt that. Get your hands off my cow, son.
Yeah.
Get off my property. Why are you on my
That's
property in
right.
the first place?
Right?
Yeah,
And
no, that makes
Taylor-
sense to me.
It does. It does. Taylor will love this one. In Washington State, it's unlawful to harass Bigfoot, Sasquatch, or any undiscovered species, with penalties including fines and jail time.
Yeah, well, I agree with that we shouldn't be harassing them.
And they have a lot to deal with.
Yeah, this stuff is like that. Someone gave me this, one of my employees. It
Herbal
makes you-
water.
well, it's like CBD water.
Oh yeah,
Yeah, it makes you feel really good. Very happy.
yeah. You look like you're super chill.
Well, I took it yesterday, but it was yeah, it makes you super chill. It's like
All right, nice.
it's great stuff.
Yeah, I was admiring Taylor posted earlier today. His family's wall is like this monstrosity of a wall that's just covered in gold, silver, medals from him and his wife and all of his kids, like destroying people at jiu-jitsu. Like they go over to Ireland and they travel all over the place competing, and yeah, I mean they're all like way into it. So
Yeah, we've been doing it for 4 years now.
oh, Indiana in South Bend, it's illegal for monkeys to smoke cigarettes.
Oh,
Well, that's unfortunate. It's cool watching monkeys smoke cigarettes. Everybody knows that.
I was just gonna say, it's a shame. I enjoy those videos.
right. Let's see.
That's like when you see those old timey photos, and it's like, "This is Carl from 1906 on his shift break from the coal mine, and he's like 8 years old."
yeah.
and he's
Oh, dude, yeah, like
smoking
those,
his-
Yeah.
dude, like
Yeah.
those 6-year-old kids. They're like smoking cigars in the coal mine and shit.
Yeah, it's
That's
bad.
like- yeah,
Back,
no.
that's back when America was tough.
Oh,
Yeah,
right. I mean, that
back
kid could
in-
probably open like a can of beans with his bare hands.
And he's like Popeye, right?
Yeah, I was just
like-
gonna say it was Popeye.
Oh, dude, yeah, he has like freaking Popeye forearms. He's like 8 years old.
He's telling
have-
people, he's telling this kid like back in my day, and he's like 17.
All right, so we'll do one more of these, and we'll drop into the to the investing. So Alabama, wearing a fake mustache in church that causes laughter is illegal.
mm-mm.
So if you're gonna have a mustache in church, it better be legit.
So if your
All right.
mustache is real and it causes laughter, that's no problems.
No,
No.
wait, I think you can have a fake mustache in church as long as it doesn't cause laughter. So what
That's-
if it's not
that's-
funny?
So
Right.
so my
You're good
question would be is who's at fault? The person with the mustache or the person that can't hold their laughter in church?
Person with the mustache.
So this is a segue to church real quick, but you know how like sometimes from the pulpit, a lot of times a pastor, if you at least in like a non-denominational kind of Bible church, Reformed church. They'll do look, they're kind of, it's very conversational the way their sermons go, but they'll basically ask these rhetorical questions. So at my church years ago, we were going through like Leviticus or something. We're going through somewhere in the Old Testament. We're kind of listing out the things you can and can't do, and under the old Jewish laws, as far as what you eat and what you do. And he's like, and he says something like, "And you shall not, eat of cloven hood animals." And he's like, "Guys, you know what that means, right? No bacon. They couldn't have bacon. I mean, what kind of law is that?" Now, of course, he's just kind of making a joke, and I just yell out from the congregation, "A bad one!" And the person next to me just stares at me, and she's like, "You said that out loud." And I was like, "Yep, I did. I didn't really think about that when I did it, but yep, I did." But it was funny because there was like a half-second pause, and then the whole congregation just falls out. It was a bad one. And I mean, to be honest, come on, bacon's great. I know they couldn't get it back in the day, but now, bacon. Now I'm just thinking about bacon.
I need to do a better job with the going back and forth in the chat. So yeah, go ahead and speak amongst yourselves. I'm trying to engage in the chat, but let's kick this off. I want to talk about investing. So I'll kick it off with this. The crypto markets, which is what I know the most about personally, it has been ripping this past week. So I mean, just in the past 7 days, I mean, you can see. I mean, this is kind of my portfolio, but in the past 7 days, Aerodrome has gone up 37.5%. Casper's up 30%. Ondo's up 45%. DAG is up 25. Ethereum's up 30. I mean, especially with Trump getting elected, and kind of a lot of the bullish comments that he's made about supporting crypto and the crypto industry and things like that. I don't know as much of TradFi, but it seems like everything is ripping right now. What if Jeff and Hobus? What have you seen?
Well, I can't really speak too much to the crypto market. I mean, I think effectively.
Well, speak on the TradFi side.
Well, I was going to say, just the only thing I can tell about the crypto is that Trump's election gives people significant. I don't know if this is right or wrong, but it certainly gives people significant comfort that they're not going to have regulatory headwinds as far as it being stroke of a pen taken away, right?
Gotcha.
Which I think is the biggest, which was my biggest fear of giving my clients investing in crypto, was just the idea that, the United States government, if they wanted to, could do the same thing they did in the 30s when they just confiscated gold and be like, "Yeah, you're done. Give it to us," right? On a traditional sense, it's kind of playbook for when Republicans win, especially majority. There's a perception that there's coming deregulation, that there will be a favorable tax environment. So that tends to be good for assets, at least short term. Now I'm making massively broad statements, but usually short term through the honeymoon phase until everybody kind of, the first 100 days, until everybody kind of realizes that it's still Washington and we still have massive problems and we still have massive challenges and nobody can fix anything with a magic wand. But for a bit, yeah, I think this is sort of to be expected. Now, I have no idea
what
it goes.
has the traditional market's been doing this past week since the election?
Oh, same, like just roaring. Well, not Friday,
nice.
but yeah, I mean, I think the S&P over the last week, S&P is up 4.8% in a week.
Tesla's up 45%, I think.
Yeah. Tesla's been absolutely ripping as well. It was highly correlated with Trump's election odds as well. It was another one of those assets in which was highly correlated with Trump's election odds on prediction markets like Polymarket and Kalshi as well. Just because Elon Musk had tied himself so much to the Trump candidacy. A lot of investors were wary for a little bit of time about potential interference of election and other lawsuits in which kind of had voice of coming up.
Yeah, because that's going to be. I mean, Tesla and Biden's administration with SpaceX and everything, they were trying to really make his life difficult So I imagine
Well-
Tesla's going to have some pretty positive regulatory decisions on their part and contracts coming their way.
There's another reason too, is the under the Biden administration, one of the things they did was the you get the $7,500 tax credit, right? And that was before too. It wasn't just Biden, but before he modified it and he made it a lot harder to get the tax credit. You had to have a certain percentage made in the States and so on and so forth. But because Tesla's the first mover in a significant way, besides like the Prius, since Tesla's the first mover that has the greatest market share as far as EVs is concerned, they'd already hit their limits on several of their models. So that benefit wasn't that big of a mover for them, right? Relatively speaking. Whereas it really helps like Kia and Hyundai and Ford with their Mustang Mach-E or whatever. Well, Trump said, whether he can do this or not, Trump said he's getting rid of that. So if he does, that also helps Tesla, right? Because you're not subsidizing Elon's competitors,
Yeah.
which makes me think I might buy an EV by the end of the year because I want my $7,500 from the United States government.
I'll bring up TradingView and pull up Tesla, and we can actually look at the chart.
But yeah, real quick, I'll speak on the crypto markets as well.
Please.
Crypto has done incredibly well since the election as well. Everybody knows that Bitcoin was a part of this, so to speak, Trump trade, and that Trump's cabinet will likely have a lot more pro crypto candidates inside of it than the Harris campaign. So as we know, and as we've covered quite a bit on the blockchain basement, Bitcoin had been kind of moving in tandem with the prediction odds of Donald Trump. And we kind of saw that the correlation of that was about 0.85. So as Donald Trump continued to rally up in the closing hours of the election, we saw Bitcoin continue to break new all-time highs. It's gone above 75K now. I believe we're touching like 80 and 81. And we've also seen a lot of other alts like Solana, Ondo, like you said earlier. Lower cap altcoins have been a major benefactor as well. I think we've also started to see that ETH to BTC chart kind of tick up a little bit. So it looks like perfect timing around the transition from a Bitcoin dominant market into altcoin dominant markets. But yeah, that's, pretty much what we can expect at this point of the 4-year cycle.
No, and that's a good point. Is those of you that aren't familiar, whenever you talk about pairs, like the ETH BTC pair, it's their price relative to each other. So instead of pricing something against the dollar, you're pricing it against another asset. So if the Bitcoin ETH pair, it becomes lopsided, to where ETH is gaining on Bitcoin in the 4-year market cycle for crypto, that usually is an indicator that, because usually Bitcoin pumps first, then ETH, then large cap crypto, and then the rest of the altcoins. So, it kind of gives you an idea of where you're at in that 4-year cycle. Did I get that right, Hobus?
Yeah, absolutely. I mean, essentially, Bitcoin is the mother of all, it's the first open cryptographic currency, in which was, truly adopted. It's truly kind of like the decision maker for the market. Tokens other than Bitcoin relative to Bitcoin trade in tandem, or, very, very, very not often trade against Bitcoin. And when they do, it's very noticeable. So yeah, I'd say Bitcoin moves first, and then, like you said, people take their profits from Bitcoin and move them into other smaller market cap tokens, which will outperform Bitcoin, which is why things are priced against Bitcoin. Because you want to see whether your investments are gaining in value or losing value against Bitcoin.
Well,
So
and
makes
I
sense.
actually have a question.
Oh, go ahead, Jeff. Or go ahead, Taylor. Sorry.
All right. My question here is, what is both of your guys' opinion about this problem that we have, that the GDP to actual market for like the S&P 500 is so out of whack? Like the value to actually, because we're really not producing more in America. But the markets are going up. Like, is this just going to be the future, or just going to keep going up and up and up? Or is this really a giant bubble that's not about to, but will burst sometime?
No, that's actually a really great question. And I'm sure Jeff has quite a bit in which he could talk to as well. Relative to crypto, though, I think, we have a couple of different pathways. We kind of need to take care of this now. I think, Trump needs to start thinking strategically about how we can start bringing down the national debt as a whole. I think the national debt is, exceeding our defense budget. The interest payments exceeding our defense budget is just absolutely absurd. We're at an unsustainable rate of inflation, and we need to start looking for ways in which the nation can start profiting once again. I forget his name, but the old CEO of Cantor Fitzgerald had done a podcast very recently with Anthony Pompliano, and he was speaking about America Inc. And he was, of course, on the Trump side. So I'm really looking forward to seeing what the Trump cabinet has to do with making America profitable again. I think we need to start looking into a lot of the natural resources that we have, and we need to start looking over the regulation in which we've put in place to start extracting a lot of the natural resources that America is rich in, like oil and lithium, from within our country. Because of course, a lot of industries need that. Businesses like Tesla, and
Yeah.
whose batteries are made from lithium.
Lithium is huge. And that
Exactly.
deposit they found in Wyoming, was it?
Yeah, exactly. Yeah, no, up in the states like North Dakota, Wyoming, there's a lot of lithium, and we also have Alaska too, which has an oil reserve the size of Saudi Arabia, but it's in Arctic conditions, so it's very hard to drill in. But we do have that reserve in which nobody has drilled yet, and nobody has access to. So I think it's time for the United States to start looking for ways in which we can start profiting from exporting goods, especially if we're going to start imposing tariffs. Businesses like Tesla and a lot of others who are very reliant on China, especially with the 60% tariff, they're not going to do very well. And those are American businesses, and I don't think Trump wants American businesses to do poorly. So I don't think the 60% tariff is going to stay 60%, but I'm sure, we need to start looking into more American resources.
I actually that brings a question to my mind that I've been wondering. I've seen a lot on social media. Is that everyone from their different viewpoints, the left and the right, about Trump's tariffs. And I'm not an expert. You guys are more so. My understanding of tariffs is it incentivizes American companies to source materials and to bring it onshore here to the U.S. manufacturing and things like that, which creates jobs, which makes it less reliant on foreign supply lines, things like that. I mean, that's what comes to my mind. Am I wrong to think that?
Well, Hobus, you want to answer this, or shall I?
Yeah, I mean, you can answer it.
Well,
Go ahead.
yeah, my issue was, so first of all, historically tariffs have been a net bad idea because it invites trade wars and et cetera, et cetera, et cetera. But you're absolutely correct as far as incentivizing, right? The challenge is, so let's say, and I mean, pick almost any industry, whether it's where your toilet paper's made or your lithium battery or whatever it might be, the amount of either, like I read once, like something like 70% of all Asian exports touch China, right? So it might be chip is made in Taiwan, motherboards assembled, the motherboard's made in, Vietnam, and then it comes to China for final assembly, then it's shipped off here to Best Buy as your laptop or whatever. So the amount of, I think everybody's gonna be shocked about the amount of things that actually come. But here's the problem. The problem is not the end result as far as the incentivizing things stuff. The problem is the time it takes to transition that for the end consumer, right? So if I'm a business that, has to buy X, Y, component parts from China because that's where they're made. There's a reason Apple makes their iPhone at Foxconn. And it's not because they're in love with China. It's because they can pay those people so much less, right? So sort of the mythology
Aren't they the
of
ones
this,
that have like the nets outside the windows because freaking people are like,
oh my
freaking
gosh,
committing suicide?
and it's terrible. But the reality is, I know a girl that used to work in. I met her when I was over on a church mission trip a long time ago. I know she worked all day long in a Nike factory, a legit Nike factory, for $6 a day, and that was a good job, right? So this idea that, well, we'll just bring it home. Well, you might be able to bring it home, but one, you got to build the factories, you got to ramp all that up, you got to ramp up that infrastructure. But when you do, are you paying union workers $35 an hour? Because if so, you're not going to bring the price down on that good that we don't like, So that's my issue, right? It's like, oh, well, now the Chinese goods are 60% more expensive, but that still may be less expensive than what you could do it for in America because of our standard of living. And so it'll be really interesting.
What are they going to do? Because the profit margins on those things are astronomical. Like they build those iPhones for, a few dollars, and then they sell them for $1,000. I mean, it's ridiculous. I guess I don't know exactly how much they build an iPhone for, but really, how much cost is it going to add to have those things built in the United States?
A lot more.
A lot more.
Yeah, but the profit margin for Apple is like, okay, well, where's all that money going? You guys are making huge profits.
So apparently, I just looked this up. Apparently, the pure profit margin on an iPhone has gone from 74% to 60% by 2018. I bet you if they made it in America, I bet you it'd be 15%.
Yeah, absolutely.
So what that's going to do is that's either going to completely just wipe out Apple stock relative to its current valuations because the company's much less profitable. And oh, by the way, that doesn't make the iPhone cheaper, right? Based on what we just said. So here's the biggest issue with tariffs. It completely flies in the face. Republicans tend to be historically, supposedly, the pro-capitalism party, right? And whether we like it or not, globalization is the most capitalist of all things, right? The most efficient use of goods and services.
Yeah.
Where it's really frustrating is where countries particularly cheat, right? When it's not a level playing field. But I don't know. I mean, the reality is, if I have, there's not a lot. It's very difficult to raise the standard of living in other countries without impairing ours in a negative way. It just is. The math is the math.
My viewpoint from my life experience and my career choices is more of a national security thing, where I look at it like with COVID. When COVID hit, and all of a sudden there's like a shortage of masks, and there's a shortage of this, and there's a shortage of that, and all of it seemed like it was because it was a global thing. China all of a sudden started because they make all that stuff, started hoarding that, everything. And so, my thought process is that if we're reliant on chip manufacturing, for example, in Taiwan and, these other countries, then, like AI development and, a lot of this, these other technologies are reliant on these, foreign entities that if for whatever reason are, taken out or become unfriendly or whatever, now we're cut off. And what do we do then? And so from my thought process, I think of things more in that way than the financial aspect.
Absolutely. And you're absolutely right. Go ahead.
Let me play devil's advocate here real quick for you. So let's imagine this. So So on the other side, we have all of the things that Jeff said, and he's absolutely correct. But on the other side, another thing of like the intention and like an example of a good thing that played out was in 1996. Toyota started making all of its trucks in the U.S. because there was a tariff in which was imposed, in which would have blown the absolute margins off of Toyota had they continued to make their trucks in Japan and import them to the United States. Instead, they set up a subsidiary in the United States. A lot of American jobs were created in the factories. And what tariffs are really at the end of the day meant to do, and the industries in which normally benefit from these the most are industrials and manufacturing. These are jobs in which America was once really known for, and today not so much. We've seen manufacturing move offshore over the past 50 to 100 years. Like it's China has been a major manufacturing powerhouse since the 1980s, and we need to start seeing American manufacturing come back. So that's really where I think Trump is headed, and where his intention is. But that's just my opinion.
Well,
I think
me
one-
personally, I would rather pay more for something and have it last. Like I know, like in the 50s and 60s, like refrigerators, vacuum cleaners. I mean, they were built to like last a lifetime. Nowadays,
Yeah.
it seems like everything.
But Michael,
lasts
that's not good for
years.
capitalism.
Yeah.
That's
You're
right.
right.
And
That's
No,
big
one more
speak
thing.
more on that.
We,
No,
we,
Taylor,
one
speak
thing.
more on that.
we keep talking about capitalism as being this great thing that's doing a bunch of good, but
Mhm.
I'm starting to wonder if it really is just a disaster of a system after a period of time, because when it's always about making profit, because the argument you guys make, well, if Apple moves it here, well, they won't make as much profit, but people would be paid more. Those things would be better. What would hurt is the stock market. Well,
Yeah, okay.
Yes.
so like the stock market is probably the worst thing in reality because it's fake.
And the
It
Fed.
doesn't actually build anything. It
Fuck
doesn't
the
actually
Fed.
create anything. And its incentive is to try to make profit for investors, but it's not even actually tied to the actual corporation. Like right now, what is NVIDIA like worth 11% of the whole United States GDP or something like that? Something
Yeah,
ridiculous.
it's insane.
And it's like, well,
And their
it's just,
revenues don't exceed in the top 100.
yeah, and it's crazy because you're sitting here going, well, this fake market is controlling everything, and anytime it starts going down in any significant way, our whole system is built upon it, so it will collapse the whole financial industry if it goes too far down. So we
So-
have to keep bailing it out.
Taylor's 100% right. There's a stat, and I don't quote me on this, but it's approximately right. The financial services sector was about 3% of the GDP in the 70s. It's now like 40%. So whether it's somebody like me or Hobus, or whether it's like more the intermediaries behind things, the financialization of the economy is a real problem, because it's sort of like, it's like the tax code problem writ large, right? So everybody, the average Joe's like, we need to fix the tax code, and I would agree with that, right? I would, except you have a cottage industry of white collar professionals whose entire jobs are contingent upon a complicated tax code. So push comes to shove, the people that put people in Congress, like all the CPAs don't want a simpler tax code. All these state players don't want a simpler tax code. So my point is, you create these cottage industry, right? Once you get a cottage industry that's too big, it's almost impossible to fix the initial problem, because you create a new one by putting those people out of work. And the last thing I'm going to say on tariffs really quickly is the most simple example for people to get is, let's say he did the 60% tomorrow, right? For argument's sake, Taylor, Hobus, and Michael, you guys are the decision makers at Best Buy. Trump's in day one, tariff 60% China. Your Samsung TVs that you're going to sell, all your TVs, because there's not a TV manufacturer in the United States anymore. Period. Gone. Last one was Zenith, right? All your TVs are 60% more expensive for everybody.
Oh, you convinced me. I'm gonna go buy that 100-inch TV now. I gotta go get it.
So
Is that Costco?
TVs are
But
so
here's my
freaking
point.
cheap now. I honestly, I don't think I'd notice.
But here's my point. What is Best Buy going to do? Go, well, you know what? We love our customers. We'll just make significantly less money on those TVs, or are they going to pass that through as the price because it's the same price at
Oh
Costco
no,
and everywhere
of
else?
course.
Right. That's the issue of tariffs: is the short-term pain. For Hobus's point of view, or what he mentioned,
Have to be some
I
pain
think
involved.
targeted tariffs are a really good idea if it's if it's either to motivate competition here, or to punish bad actors. But when you do gigantic
Or a
blanket
stepped
ones, everything just
approach.
gets more expensive.
I
or
agree
stepped
with that.
approach.
I completely agree with that. Targeted tariffs are a much more effective use of tariffs than blanket tariffs. That's completely true.
I like him. He's smart.
All right. So I wanted to get a little bit more
Thank you.
on your guys' opinion on like this idea, because we're talking about investing. Because this is the biggest fear. Like right now, you're watching the market shoot up, and there's this feeling like you're missing out. Oh my gosh, if I don't get in now, I'm going to miss out on these huge gains. But what do you do in a situation like this where, you know, it's not like I can just go out and pick stocks and go, okay, let me do an analysis of this company. Oh yeah, this should be a good company to buy. It's everything is significantly overvalued on this in the stock market or anything like that. And so, or even in crypto, like I want to get into crypto now, but I'm like, it's $80,000 per Bitcoin right now. If I jump in now and it goes down 50% because we have to have a correction, most people can't stomach that.
Yeah,
That's true.
See, I understand
Well, I
that,
mean-
and
Oh, go ahead.
I understand that, and coming from like being a portfolio manager on a small startup hedge fund, a lot of talk about a lot what you talk about when you incorporate crypto into your portfolio is drawdown. Investors want to hear a lot about your drawdown, like, you know, like how much am I going to lose before seeing like all of the real positive returns. What the thing that I think you need to look at when you invest, whether it's equities, whether it's, you know, crypto, whether it's whatever it is, you need to really find things in which are offered to you at a valuation in which if you owned it and the price went down a little bit, it's not a concern. But like you can't be buying a large concentrated position in your portfolio at a price in which, you know, it's indecisive. The market may go up, the market may go down. There's always really good deals in the market. You just have to be attentive and keep your eye out to find them. Like right now, if you look in big tech, yes, I completely agree. With Taylor, I think Nvidia is like very overvalued at $3 trillion valuation. But do I think Celsius is overvalued after a miss on earnings calls and the stock dropped 60%? No, I don't think that's overvalued. I think, you know, there's probably a lot of really good deals out there. And you need to continue to like really look for what's available at the point in time, because you can't chase green candles or you know, can't chase missed entries. That's called FOMO.
I want Hobus, I want you or Jeff to speak on Crypto Breezy's, you know, comment, but then I want to you know, shift into where if you say you had $10,000. This is my question after you guys, you know, address Crypto Breezy. If you had $10,000, you know, what would you personally do? Because you are financial advisors. What would you do investment wise right now, knowing what you know about TradFi, crypto, real estate, whatever? Where would you put that $10,000? But Crypto Breezy says indexes are your best bet for stocks. What are your guys' thoughts on that?
Jeff, you want to go first?
Such a loaded question. Well, first of all, it would obviously depend on my goal, my time horizon. I mean, there's so many different things that come into when you're trying to figure out where you should put the capital. For most people, I mean, I'll tell you this: for most of my close to retirees or retirees people, because I am I am concerned about how elevated valuations are compared to historical norms. I also feel like that they can go on for a very, very long time. And, the number one resource all of us have, people understand this, but your most precious resource isn't your money, it's your time, both how you spend
Yeah.
it, but more importantly, you don't know. It's always going the wrong direction, right? We always have less of it as far as lifespan's concerned, right? And we
Speak for
don't know
yourself.
how much less we have. So it makes it so the challenge is, like, my biggest argument, the buy and hold crowd has been like, it's easy to say, well, look, the market's up, 4x since '08. Right. But what if '09 was the year you're supposed to take your wife on the 50-year anniversary and pay for your daughter's, wedding and, blah, blah, blah. I mean, like, timing matters. So that being said, I use a lot of hedged products for my clients, whether it's structured products, which is basically effectively a structured product. It's sort of like a CD in an investment bank that's behind the scenes. It's just a packaged options product. So, for example, we'll say, to was it Crypto Breezy's point, it'll be like, hey, you can invest in the S&P 500, the Dow Jones, and the NASDAQ over the next 18 months, and we'll pay you up to 30% of the growth. We'll give you up to 30% of the growth of the worst performing index, that kind of thing. So if the market goes up, cool, I can make it to 30% in 18 months. And if the market goes down, you get your money back. Well, I like that better right now than just sort of unprotected sort of indexed investing. Because my big argument against indexed investing right now, which historically, yes, absolutely is 100% right. It's what's built, massive portfolios for people over generations. My issue is that because most indexes are what's called market cap weighted, really, when you're buying the S&P 500, you're buying 7 to 10 companies tops, because the bottom 350 companies could all have a great day. If Google and Amazon, if Google and Microsoft have a bad day, the market's down, period. Right? So you're not as people are not as diversified as they think they are, is I guess what I'm getting at. So I like hedge products for the average person that's a little bit closer to retirement. I think I might I'm a little bit more of a gambler. I think I might just buy options, 1-year options or 2-year leaps, which is longer options, on a rolling, like every month. Like if I take 10 grand, I might just say, hey, I'm gonna put, $700 away, $700 in options over the next, or $800 in options over the next 12 months, and just see, because the convexity of the return is pretty good.
For people out there that might not be as knowledgeable, like, what exactly are options?
So options are simply the right to buy a stock in the future at a set price today. So let's just say, for easy math, let's say you have, and these numbers are obviously all not real, but let's say you have stock in ABC company and it's $100 a share and you have 10 of them. So you have $1,000 worth of stocks, right? And you think, hey, I think it's a good stock. You want to hold on for the long term, but you really think it's not going to go up too much next couple of years, right? You think it's fairly valued, right? And so I come to you and I say, and this is, again, an egregious example, and I come to you and said, hey, matter of fact, let's just say it's Microsoft. I don't know, but it's at $100 a share for math. So I go, hey, through the market, of course, this happens, but I come to you hypothetically, Michael, I go, look, man, I want to give you $1 a share for each of your shares. So I'm going to give you $10 for the right to buy your shares from you anytime in the next year for $120. So I'm going to give you $10 right now. That's your money. And anytime in the next year, if I want to buy it from you at 120, I have the right to do that. And you're sitting there going, well, shit, it's at $100. I'll gladly sell you my shares for 120 if that comes. I'm cool with that. On the other hand, if it doesn't hit 120,
so basically you're speculating that it's going to appreciate in value.
More than what I said the price limit is, right? So let's say two things happen. There's only two options here. Let's say it's a 1-year option. Option A, or scenario A, the stock goes up, down, and sideways. But let's say it goes up like 118, it goes down to like 96, it kind of comes back to like 110. A year goes by, my option expires. I don't have any right to buy from you anymore. You're looking at your portfolio now. Your stocks are all worth it's worth 110 times 10 shares. So you're $1,100, and you got to keep my $10 premium. You get to keep that. You're like, sweet, no risk on your part. You're great. However, let's say that Microsoft figures out artificial general intelligence, right? The ChatGPT people and all that crap. They figure out basically how to make data from Star Trek. and the next day it's $1,000 a share. I get to come to you and be like, hey, Mikey, here's $120 times each
Remember
of your
that deal we
shares.
made?
Yeah. Now the good news, Mike, the good news is you were real happy to sell it to me for $120. So I'm going to give you $120 for each one of your shares. That's $1,200.
Yeah.
And I'm going to turn around instantaneously and sell them in the market for $1,000 a share. Now, obviously, that's a super, super, super egregious example. But the idea of an option is you got a guarantee to buy at a certain price over the next year or to sell at a certain price over the next year. And if the market moves the way you are betting, you can make a lot more return per dollar that you put out. But if it doesn't, the money you spent is gone. Gone. So it's primarily used by institutions to hedge. Hobus, you got something to add to that? I do okay on that?
No, that was perfect. And the money you spent is the money you spent on the contract. So like your maximum loss is the money that you spent on the premium of the contract in the case that you're the purchaser. So, there's limited downside and there's outsized returns when you're correct. So it's essentially like an insurance contract on your equity. If you think the market's going to go down, you can, buy a put, which ensures that you can sell your shares at a certain price. And if you think the market's going to go up, you can buy calls, which ensures that you can buy equity at a certain price. So, in the case that either of those happens, you're locked in at both of those cases, and you can sell instantaneously, just like Jeff said.
Nice.
So your real risk, just by the way, your risk in options, which is, by the way, all priced out kind of by the market, and it's much harder than it sounds. Your risk is treading water, right? It just kind of goes nowhere as far as the person investing in them. The person selling them, that's where they print money. Like some of the people I know that are the most successful people I know in investing actually sell options, because the way they look at it is, every now and then those crazy situations are going to happen and I'm going to miss out on that hypothetical gain. But most of the time, they're just collecting that premium while they wait. And it's real nice, right? So I like that. But that's just, hey, I'm sitting in a casino in Vegas doing this conversation right now. So maybe nobody should listen to me.
He's like, Bennett, all on black. All on black.
Oh my gosh, I gotta tell you this real quick, 30-second story. We have a buddy, there's a buddy that like is kind of tangential to our group, and he has what he calls dream numbers. Like every year he like has he says he dreams about what numbers he should put on. And of course, every year it's like, hey, everybody give us $10 for the dream numbers or $20 for the dream numbers. We're gonna put it on roulette. We're gonna do it. And I remember this time I handed like $20. I'm like, has this ever worked? Dude, the guy said his dream number was 12, about the number 12, bet even, bet red, and bet 1 through 8. Well, obviously hit 12, it's even, it's red, it's going to work anyway. Son of a gun, dude. One spin, I think we put $100 out there amongst the things. It hits 12. We made $1,200. It was awesome. Everybody got the $120 back for the $20
One of these times we'll have to tell the
awesome.
story about you wearing the stretchy pants because everybody like paid you a bunch of money.
Yeah. I may or may not have walked around Vegas wearing Lululemon hot pink leggings. And you know what? For $500 you would too.
That you may have. It was one of the first stories I heard about Jeff when I went to Texas to visit Taylor and the family was Jeff wearing Lululemons around Vegas and like around the casino.
Yeah.
But here's some investing ideas that are not as risky, but are really good right now because we have high interest rate. Right now, you can buy OXLC. They're paying a 19.8% dividend per year right now. And it's
explain what that is for people.
Those are just mortgage notes. They're just they basically buy mortgages. And so, but they have a good dividend rate right now.
What's the risk like?
What's the what?
I guess what's the risk level?
These are low. These are low risk. I mean, the problem in the mortgage industry is because it's so slow right now. they're really undervalued, the stocks, because basically for the last 3 years, no one's been buying and selling real estate. So their stock prices have
interest
come
rates have
down
been
a
terrible.
ton. So like on one analyst has OXLC down it's about down. He thinks it's about down 10% below what it should be right now. And
What's that sticker? What's that ticker?
OXLC,
Huh.
Oxford Lane Capital Corp. And then like there's XFLT. It's paying about a 15% dividend right now, which they pay monthly.
You know what
We
I
should
like?
say this is entertainment only and not technically financial advice. Please consult your financial attorney of your financial advisor, because we are not your financial advisor. There you go.
Yes.
All right.
Yes.
Is,
Thank
is,
you.
is this it? Oxford Lane Capital Corp?
Yeah. But like at the end of the day, it's like mortgages. These companies are kind of distressed in the sense of they are dealing with the fact that the mortgage industry has been hit so hard. But these are the ones that they still are surviving. They're still doing well, and I just don't see much longer that we're not going to have a big break in, a movement again happen in the mortgage industry, and they're still holding on good. So,
What's
What's that chart?
I'm drawing trend lines and shit.
Oh, Jesus. All right. So let me step in here. From a technical perspective, I wouldn't buy this chart, unfortunately. Yeah. From a technical perspective, I wouldn't buy that. And going back to what Vet had asked earlier, I personally, my investment strategy is not to invest in fixed income instruments. I'm a very risk-on equity and currency investor. My portfolio right now, if I had $10,000, would be filled with mid-cap equities and cryptocurrency. I think as we currently sit right now, the Fed is in a decreasing inflationary environment. They're decreasing in interest rates right now. So there's going to be a lot of shift to mid-cap companies. And I think mid-cap companies are going to be the benefactor of lower interest rates over the next couple of months if they continue to lower them.
Well, one just really quick. What I want to ask you before you continue is, Taylor brought that up because it was a very low risk play. I mean, what would you consider your strategy as far as risk tolerance?
My risk tolerance, it all depends. Like I'm a macro investor, so I focus on owning the 5 to 10 best investments I'd say 8 to 10 best investments at any given time over a 5 to 10 year time span. So
And that's a mixed basket of crypto, TradFi.
yes, yeah. So like I personally hold eight per sector of investments. So I hold 8 in crypto, I hold 8 in equities, and that's it. I'm diversified across 16 investments. That's my entire net worth.
Are you open to share what you're currently invested in?
Sure. Let me open up my accounts. I know.
No, is this your personal investments or your funds investments?
My funds investments are very similar. It's a 15 to 20 high conviction fund, but it's long only.
We need to talk offline.
I just set all you guys. So if you want to share your screen, feel free.
You did what?
I can't share my screen. I have tabs that'll give information.
Oh no. I'm just saying. I just set it so like if you guys want to share your screen to share something, feel free.
Okay. Thank you. But what I was, I forget what I was gonna say before. But wait, so yeah, no, so I focus on owning like the 8 to 10 best investments at any given time. I'm a macro investor. Interest rates for me are a variable thing right now. We have a lot of investors like Stanley Druckenmiller, as well as others who are short bonds. They think interest rates will eventually rise over the macro time frame again, that interest rate, that inflation will kick back in, and I am of that party as well. And with that being said, inflation is a constant, it's not transitory. We're going to see central currencies continue to devalue themselves, and that's why I'm long equities, long Bitcoin. My fund and my personal investing style are very similar. A lot of the companies, do overlap. But, with that being said, you know, I think these are the greatest investments for the next
Breaking
5 to
news!
10 years.
Breaking news! We're new all-time highs on Bitcoin.
Yeah.
Looks like we were teasing. Crypto Breezy was saying that we were breaking out, so I checked on it. We
Yeah,
hit 81,655.
I'm amazed at how quick the dip was eaten up earlier today. Like I was looking at the charts. I can't believe people were saying the short that. Like, we're clearly back in bullish momentum right now.
People are
So
gun shy.
yeah,
People
but
are still really gun shy.
like most of my money in short-term trading in crypto over the past 3 months has been made in shorts. Like, I made a ton of money shorting the market. It was very predictable when things were going to go off of certain sets of ranges, when price didn't accomplish breaking through high resistance points. So, it was just very easy for me to do that. But like, the momentum of the market has changed. A lot of things have changed in the macro. A lot of what I've focused my personal investments around was the Trump trade. I was a large proponent thinking that Trump was going to get into office, so I shifted a lot of my investments around. And I think that there's a lot of opportunity right now in the markets, like even at current valuations.
I
Oh no,
think
I would tend to agree. I mean, I'm all in on crypto. I got my bags packed, and I've actually gotten into DeFi myself. So if I had $10,000, which the reason I picked that number is that's what I decided to use to play with DeFi, and specifically Aerodrome Finance and their platform. And I've actually delved into that and made some, like, just in the past week, some very good returns. So basically, what crypto DeFi, those of you that are listening that maybe don't understand what that is it's basically where you become the bank. The easiest way I can explain it is, traditionally you put your money in the bank lends out your money. They make interest, from lending it out to people, and through credit cards, through mortgages, through car loans, those sorts of things, and they give you, a 0.01% or whatever on your money in the bank. What DeFi does is kind of turns everything on its head. So instead of the bank getting that 8% or that 10% or whatever that APR is, you get it. You put your money in, and you can lend out your money. You can there's multiple things you can do, and from doing that, you earn yield. So what I'm doing is I'm using this. And so people come here, and it's where they can swap crypto, they can, do different things, and that incurs small fees. But because of the volume of fees, basically you earn a portion of those fees for what you have, that you're providing for the liquidity for people to make those swaps. So this is mine, full transparency. These are the pairs that I am, contributing to, and I cleared everything out. And so this is what I've made in a day. So, basically in a nutshell, what I've made today is about $100, a little bit more. but about $100 off of a $10,000 investment. So it doesn't seem like a lot, but that's 1% in one
In a
day.
day.
Yes. And that's what I've been averaging for the past 5-6 days. And you can see that this is the emissions APR, and it's paid out in crypto. So as long as crypto is appreciating and you're holding that asset long term, it's it goes up in value. So maybe I only made $100 today, but if say Arrow, the crypto asset Arrow goes up by 100%, that $100 becomes $200.
Yeah, but Michael,
Um,
I want
Go ahead.
my issue with I did this with another thing, and
No, please go ahead.
These crypto places, they're just like like the company I went with. They were just creating more coin, and so they were devaluing the asset, and I was just like,
Yes.
oh, this is just a scam. Instead of actually the Fed doing this,
That's valid.
some corporation
That's valid.
doing it.
It's inflationary.
Yeah, and so I'm like, my experience with crypto was, oh, this is just I'm switching my faith from the Federal Reserve to a bunch of dorks sitting around some computer screen somewhere that I don't even know.
No, honestly, no, that is 100% a legitimate argument.
It
The
is.
reason that I'm using Base and the reason that I'm going this way is BlackRock is backing Base. Coinbase, this is their go-to DeFi platform. And yes, it is inflationary because they are creating more Arrow to pay out, those, fees, or not the fees, but what I'm earning, they're paying out because it's inflationary. The
So
key is to not, to constantly be taking profits,
No,
just like you would with anything.
yeah.
You need to be peeling off profits and putting them in stable coins and
So
things like that, and diversifying, because you don't want to ride these. If the bear market comes, Aerodrome and a lot of the other cryptos are going to take a dip. So you need to read the markets, and you need to be peeling off those profits and and laddering out so that you secure those profits. Because if you're constantly rolling those profits back into those assets, if the market crashes, you're going to be left holding the bag, and you're somebody else's exit liquidity.
yeah, so for Jeff, and everyone else out there who comes from a more traditional finance background, what Vet's doing here is he's essentially taking his capital to a platform in which allows you to participate in market making, and he's providing liquidity to certain pools, currency pools, in which his capital is present for these market making activities. Now, so 50% of his capital is going to be allocated to one currency, 50% is going to be allocated to the other, and participants in this decentralized exchange can swap between the currencies with lower slippage fees using Vet's crypto. And that's exactly what he's doing, is he's receiving a fee for people swapping between the tokens. Now, what this is contingent on is both tokens continuing to hold value. And this is where DeFi often sees its pitfalls, because oftentimes we see levels of high volatility, and one token may appreciate in value more than the other, and therefore you may see impermanent loss, because although you're holding one side and one side may appreciate in value, the other side is not, but your currency value will maintain a 50-50 balance. So there's a lot of
And I'm glad.
yeah,
Thank you very much, Hobus, for explaining that
there's
and
a
bringing that up.
yeah, there's a lot that
It,
goes into it, and it's a very complex situation. So
yeah.
what I advise to do is do your own research on DeFi and liquidity pools and providing
Yes.
liquidity. And if you are interested in that, there's a lot of other people that can explain it better than I can and provide visual context to it. So
There's a lot of really good channels on YouTube that explain it very well. And to address the impermanent loss, this is what Hobus was talking about. So with this pair, this is one of the ones that I'm invested in, is Wrapped ETH and Arrow. So there's a range. I only earn if it's between that range. And so, here's the bottom range, here's the top range. So as long as this, this liquidity pair stays in that range, I'm earning. If it goes out, then I have to do what's called rebalancing if I want to start earning again. However, as it moves through this range and it's going down and up, basically it's buying and selling off each of these. So I have an equal amount when I first go in of ETH and Arrow, but as it moves up, it might be selling off my wrapped ETH and buying Arrow, and as it goes down, it will do the reverse. So at the end of the day, if it ends up going down to the bottom here, I might end up with all of my value in Arrow and having no ETH. And so you really need to ensure that if the market takes a dump, are you okay with long-term holding whatever you end up having all of your value? So there is riskier plays where you can use meme coins and all of that stuff. I'm more conservative and I'm looking at long-term holds. So I don't do those plays. But that's what he's talking about with the impermanent loss is
Personally,
So
that
go
oh, go
ahead,
ahead, sorry.
Jeff.
go ahead.
No, go
No,
ahead.
I want to hear what you had to say because I think it'll probably add context to my comment. Go ahead.
Yeah, so like where I see the DeFi really has value currently is within the stablecoin market. I think stablecoins have become this like really revolutionary world technology. We've seen a lot of adoption of stablecoins like USDC and USDT outside of the United States, primarily outside of the United States, may I add. People are really, finally getting access to saving in US dollars in countries like Kenya and other third world countries, in which are seeing like high rates of dollar or high rates of central currency inflation and devaluation. But I think a lot of the providing liquidity of stable coins is really where there's a ton of opportunity for really conservative investors. So for people who are looking for those investments similar to the ones that we were talking about earlier, with more along the lines of like mortgage bonds or mortgage-backed securities in which pay a higher interest rate, I think that there's a ton of opportunity for lending stable coins and providing liquidity in stable coins on platforms like Aerodrome, similar to like what Vet's showing now. You can receive interest rates in which are much higher than what is currently being paid out on a 30-year treasury bond, which I believe is like 4.34%. I may be wrong, but I saw that the
Yes.
other day. Yeah, 4.34% on a 30-year treasury rate. So you can currently be making like 8 to 10% easily providing liquidity or lending your USDC, and you can be paid in kind. That's the other thing. So you don't have to be paid in DEX tokens, in which are made up by other, blockchain companies, and which are fluctuating in value. You can be paid in kind in USDC. So if you're looking for more of a conservative investment in crypto and you want to get involved in the blockchain space, that's where I would be looking, is to be looking to yield farm off of stable coins.
And you just do this
So
like off of Coinbase.
Yeah, you can stake your stable coins on Coinbase, but what you really have to do is you have to create a wallet, and then you have to use Aerodrome or liquidity providers or automatic market makers within the
So
blockchain ecosystems, depending on which
so
blockchain you're on.
basically that's what I do is I use Coinbase, and with with Coinbase One, I think is what they call it. And it's a membership for $30 a month. You can earn, I believe it's 5.6% APR on just holding your USDC. No risk, I mean, other than if
There's
Coinbase
always
goes away.
counterparty risk, Vet. You
Yeah,
need
but I mean it's
that's why I
but
recommend doing everything on chain through
yes.
on-chain, fully on-chain
However,
applications similar to Aerodrome and Aave.
if you want a lower risk play, like Hobus was just talking about, I highlighted here, USDC and USDT are two stable coins. There's not going to be any volatility. You're not going to have to worry about the impermanent loss, and or that risk is minimal. You can earn 15.39% by simply contributing to this liquidity pair, which is an awesome return, as far as an APR for, a very low risk play. So, if your risk tolerance is a lot less, this might be something that you want to look at. And again, not financial advice, but your risk here would be probably with the Aerodrome platform. Correct me if I'm wrong, Hobus, or if USDT or USDC depegs.
Yeah.
What are you on, Michael? Is this is Arrow?
Aerodrome Finance. It's aerodrome.finance. And it's basically what I do is I go to Coinbase and you create a wallet, the Coinbase wallet. And then you just go to the Aerodrome, and I can walk you through it sometime, Taylor. Just give me a call. And then what you do is you go up here and you just connect your wallet. And then once your wallet's connected, you have full access, and all of your funds that are on Coinbase are accessible here. And so, and then if you need to swap, so like say like all of your money is USDC, but you need to get some USDT, you simply go to the swap, you pick USDC, you want to swap it for USDT, and then you just, whatever's available in your wallet, you can select, how much, or if you want to do all of it. And then you basically, buy however much you need. Go over here to liquidity, deposit liquidity. And then you pick those two tokens, USDC and USDT. And then it comes up. And then here's the one where you earn, 15.4 new deposit. And then you can actually pick, and you don't have to worry about it because, it's a stable coin. So that it shouldn't vary at all. So you go ahead and pick the narrow range, and then however much, you want to contribute. And then it will come up over here once you pick, and you just, click, and it will say deposit and all that. And then you're done. It's that easy.
That's cool.
Yeah.
So my comment I was going to make is simply, and this is probably a vast oversimplification, but as soon as I heard 1% a day, right? So let's just say, forget about compounding internally of what your returns are. We're talking about getting a 3.6x a year on your investment, right? So I would say if this is working right now to some degree, you may be in the equivalent of the DeFi era. That is the equivalent of being the guy that's selling shovels during the gold mine.
Oh yeah.
Right.
Yeah,
but it's not reasonable to extrapolate it forward for decades by any means. Like this is a unique time. Now, I also think what we're going to see that's a little bit weirder is I think we're going to see kind of a bifurcated crypto market where we have a obviously Bitcoin's the granddaddy, but a continuation of a solidifying around 3 or 4 or 5 coins, several different stable coins. And then on the other side, I think you're always going to have these mean boom and bust, because anybody with an internet connection and a laptop, my understanding is with a little bit of effort can create their own coin. And if they happen to catch the imagination through social media of the right people and the right crowd.
That's exactly, you're describing what a meme coin is.
Right, exactly, right? So I think we'll always see that kind of be there as a sort of the gambling element of the industry. But I think it's going to become, I guess my point being is, I mean, God knows how many, I have no idea how many coins and different types of out there. But I think we're going to continue to see kind of like the economic equality thing, like the rich keep getting richer. I think we'll see that in crypto. I think you'll see here's sort of like in 10 years, what people would consider not really quote unquote risky anymore, not avant-garde. It's like, this is what crypto is, like the big brand,
diminishing returns.
Right. And then on the flip side, you're going to have always sort of quote unquote startups. And it'll be interesting, to see how it all shakes out. But I will admit, probably I'll look back, and the greatest, financial mistake of my life was I sat next to a kid in 2011 who looked like he hadn't had a bath in 3 days on a plane on my way to Vegas. on my
Yeah.
first trip out here, and he sat there and he told me all about his Raspberry Pi and mining Bitcoin. I had no freaking clue what he was talking about, right? And at the time, I kid you not, Bitcoin was $60 a coin.
Yeah.
Right now,
Yep.
I comfort myself because I'm very much a student of human nature when it comes to investing. Let's just say I'd spent, just for grants, I dropped $1,000, bought what, 18 coins, whatever that comes out to be. If Bitcoin had gone to
$80,000
no, if Bitcoin had become $600 or $500 a coin or $300 a coin, I'm like, oh my gosh, I 5x my money. There's no way I'm holding on to it thinking it's going to be $80,000. I think the only way you really make money in
That's
crypto.
what most people did. There's very few people that bought that early and have held this long.
The only way you make real money like that, that's the other kind of like one of the worst things that I think in the stock market for the average person is this. They'll hold up. They'll talk about how stocks created more wealth than, they'll talk about Bill Gates or Larry Ellison or, who name a founder, right? Basically any founder. And the reality is no investor, I mean, maybe Warren Buffett, if you want, but no investor, a regular human investor, buys Microsoft in 1983, right? And sells it in 2024. Nobody gets the 50,000x return unless you're the CEO or an officer because the politics of it, right? Can you imagine if Bill Gates after Windows 95 was like, yeah, I'm out, I'm selling? It crashes the company. You can't. He's got restrictions. He's got to file with the SEC. There's blackout dates. Like basically, it's extremely difficult as a founder when you're running the company to get significant exit liquidity. Actually, I mean, it's one of the most brilliant, savvy things I've ever seen Elon do is when he did his like, I'm going to do whatever this poll says. Should I sell 10 billion? He had a perfect excuse. Well, I'm just a wild and crazy guy. And I asked Tesla, I asked X and they told me to sell my Tesla stock. I just didn't, I'm just fucking around. But really, it was a great way for me to get $10 billion.
O'Breezy says that you need to make Jeff's Lululemon coin and
It's actually
and we can put a picture of you in the Lululemons and maybe it will
there
go
are
viral.
some pictures that exist and I'm gonna have to get a lot of ownership for that to come out.
Wait, Vet, I want to highlight something that Jeff just said real quick because it's actually like just a testament to how much of a meme Elon truly is. So under Rule 144, which is like the rule of like control ownership stock in equities, you can only sell like 75% of the value of like you can only sell like 75% of the value of the trailing 2 weeks volume and liquidity in the markets so that you don't like tank the market. So what Elon did was like he goes and he stirs up all this shit on Twitter and stirs up all this buying and selling activity on Tesla stock over like these 2 weeks to a month span. And then when he wants to sell $10 billion, it's not a question because the liquidity and the volume of the markets over the past 4 weeks had been just absolutely bonkers. So
100% manipulation.
It's completely like it technically is, but like it's amazing. Like he's just such a meme, and I love it. Like it's hilarious. It's absolutely hilarious. He played by the rules. Technically, he played by the rules, but it's such a meme, and it's just such a testament to who Elon Musk is. Like he's one of the smartest individuals to ever touch the face of the planet Earth.
He is.
Honestly, love him or hate him, Elon is definitely going to have a place in history. I mean, just the things that he's accomplished. It's insane. It's on so many different levels. It's not just in one silo. I mean, the guy, with what he's done with Twitter and like freedom of speech, what he's done with rockets, what he's done with batteries. It's just the Neuralink. It's like the list goes on. It's insane.
It really is amazing.
It really is. Gentlemen, I'm gonna have to go pretty shortly here.
Yeah, likewise.
Yeah. We've gone over. I've really enjoyed this conversation. Thank you all for taking the time. I'm really glad. Hobus and Jeff and Taylor. I'm really glad you guys were able to make it because you guys are a lot more knowledgeable on this stuff than I am. So I always love getting your input. But I do want to say happy birthday to all my fellow Devil Dogs out there. It's the Marine Corps birthday today, November 10th. Semper
Hoorah.
Fi to all my devils out there. And any closing thoughts, Taylor?
Stay on and show me how you do this thing on Coinbase after we're done.
Trevor's like, I'm ready to make some money.
Ah,
I want that free stablecoin yield. It's perfect.
right?
Exactly. If you're gonna give me 15%, I'll go for it.
Hell
See?
yeah, why not? I mean, it's a
See,
lot better
people?
than having it sitting in the bank.
There's a lot of
I'll
opportunity
definitely
out
stay
there.
on with you, Taylor, after we go. Hobus, closing thoughts.
Just want to say there's a lot of opportunity out there in the market for those of you who are young individuals looking to invest. Just keep an eye out there. Make sure to be doing your own research. Don't listen to any influencers trying to show you any tokens. Yeah, that's about it. If you guys want to follow me, you can follow me on X at Hobus Crypto. That's the only place I am. But yeah, appreciate you for having me, Vet. Thank you for all the awesome chats. I really appreciate it as always.
Sweet, I
Yeah,
just
no, by all
followed you.
means. Yeah, follow Hobus. He actually has an X space with Drew over at Blockchain Basement on Wednesday evenings.
Yes.
On X, if you want to join him there. A lot of really good info gets put out there. So by all means, Jeff,
Appreciate you.
you got anything in closing?
I would simply say, even though I voted third party out of sheer principle because I was pissed off at both. I'm truly hoping that with the majority and the quote unquote mandate that he has, I do think that while I don't think it's the last election ever either way or any sort of crap, I do think that I'm hopeful that this is enough of a motley crew of outsiders that they go in and they F some shit up and they take advantage of the opportunity in front of them, because we really do, to the point that Hobus made a lot earlier, and that we really got a problem and we really got to start addressing them. And I think, my biggest mistake was never buying crypto, was not buying Bitcoin in 2007 or 2011. The biggest mistake, and I'm astounded that nobody had the foresight to do this, in 2020, when the 10-year hit 0.6 and the 30-year was like 2.1, someone should have come out. Congress should have got together. They've done it in Australia and other places. So they should have done a 50 or 100-year note. They probably could have. We probably could have refinanced our entire national debt in a 50-year note at like 3%, right? Or maybe 3.5 for 100-year. People would have gobbled it up, and we would not be nearly in the situation we're in. And we let that go right past us, which is just like we didn't fill up the oil reserves when oil went negative. Like, I don't know what's happening up there. I don't know who makes these decisions, but they're asleep at the wheel. So hopefully Trump and team will, for better or for worse, do something, because we cannot continue on the path we're on. I'll tell you that. That's for sure. That's mine.
Awesome. I'll say for mine, I'll just say, keep an open mind, and definitely make sure that you understand your risk tolerance, because with emerging techs like crypto, you need to have a high risk tolerance. I'm not a financial advisor. I'm an old beat up vet that lives in the woods. But you need to approach investing in a very logical, unemotional way. If you're emotional, you're going to get wrecked. And you should only invest money that you're willing to lose.
Amen.
Treat it like you would, a blackjack table in Vegas. It's entertainment. There's a chance to win, but there's a lot of really smart people out there that are very eager to take your money. So unless you really know what you're doing, don't degen into things. And degen is, be a degenerate and just throw all of your money at some meme coin thinking that you're going to get rich overnight. Educate yourself. There's plenty of information out there. There's people like Hobus. There's people like Blockchain Basement. There's a lot of people out there that if you're careful, you can find, and that will give you really good information that will set you on the right path to potentially make life-changing money. But again, be very careful. And I'll just end with that. Thanks, gentlemen. I very much enjoyed this episode, and Veteran Crypto out. It's not wanting to end. I am trying to end it.
I can just call you.
Yeah. No, I'm trying to end the stream, but it's not wanting to end.
Or maybe I have to leave.
Yeah, try that.